Alright guys, how's it going? I know it's been a while since I uploaded a video. We have a 2-month-old in the house, so as you can imagine there's not a lot of quiet time to make videos. But anyways, I wanted to continue the series talking about the transparency, at least in one of my investment accounts, and show you how that account grows over time and the dividends that account builds. In this video, I want to talk about the realized gains I had in 2018 specifically. Now, as you remember in one of the previous videos, I shared my dividend income from that account last year. It was just under $2,000. So as you can see, this number right here. So if we flip to the other spreadsheet here, so as you can see here, everything I sold in 2018 was stock-based. There was no mutual funds. You can see the quantity of shares and the company's stock that I sold and the date that I sold them. So as you can see, it's all from 2018. So as you can see, I did have one short-term loss. I bought some AT&T stock and I kind of got cold feet after purchasing it, and I'm like, I regretted buying it, so I actually sold relatively quickly and had a short-term loss. But other than that, everything was a long-term gain. And if I scroll up here, you can see I had about just under $14,000 in long-term gain. So if we take, I think it was 1900 or so, I think it was like 1997. So if we take that and add across, so we get a total of just under $16,000, and I would consider this relatively passive income. Dividends are almost fully passive in my opinion, and these long-term gains are also relatively passive, right? Because you make an investment decision that takes some research, so you do put in some work, you buy the stock, and then basically you're leaving it sit there, and you do basic kind of due diligence after you purchase the stock, but it's nothing that requires serious work like going to a day job or running a business, things like that. So that's pretty good, almost $16,000 in passive income or passive increase in your asset base. So let's briefly talk about why I sold these stocks. There's numerous factors. I'm not going to go through each specific company where I sold stocks, but I think there is some general consensus on when I sell a stock. The first scenario is if they cut their dividend. That's usually a sign that there's trouble in the company, and I'll usually sell the stock. The second reason I'll sell the stock is if they've had a relatively large run-up. I won't always sell all my shares, but I'll take some off the table and lock in some gains. I think that's the prudent thing to do. I know there's some people that they only care about dividends, but in my opinion, if I have a company that has significantly run up in value and I have made a significant gain from that company, and there are other companies that are just as good of an organization, taking some of that money that has run up, where the stock price has run up, and put that in something that's more of a value right now, to me that's a good move, because you're diversifying, right? Because you have sold some of your shares from something that's already run up. You still have some shares in the original company. You put that money into something that's fairly priced, and there's a chance that could go up over time. And in my personal investing, usually both companies pay a dividend, so I'm still getting some dividend income as well. So as you can see here, that is something I did. Pretty much all these companies here pay a dividend, except going down the list here, working off of memory, I think O'Reilly is the only one that does not pay a dividend of some sort. So another reason I sell stocks is something has fundamentally changed about the company. Going down this list, there's not any one company that jumps out where something fundamentally changed about the company. But that is a case, right? So if something changed about the company, take for example, Kraft Heinz has been in the news lately. They actually cut their dividend and they've been having a lot of struggles. That is a time where I would look at whatever those struggles are and determine, is that going to impact the company's long-term prospects? Now it could, it may not. If that's the case, or I'm not sure, I'm likely going to sell. Another kind of example of that is, so Delta Airlines was a company I purchased here. I made about almost $800 off of that, and I completely sold out of that stock. My premise for that was I felt like, you know, I made a pretty good return on that. There was changes in, namely, like fuel prices go up. When fuel prices go up, airline stocks generally go down. And fuel prices were increasing. I was like, you know what, I made a decent gain here. It does pay a dividend, but it's not that big of a dividend. I can probably get better dividend income somewhere else, and there were some other better values out there. So I sold the airline stock. And that's kind of the analysis you got to do, right? You got to look at the company. You got to look at factors outside the company in the wider economy and market that may impact that organization. And you also should look at the price, and if it has went up significantly, if there's somewhere where you can deploy your capital that's a better value right now. So those are the three areas that I think that I personally look at, and that may be something you want to consider. All right, guys, feel free, if you have any questions, post them in the comments below, and you know, let me know, you know, what was your return either from dividends or, you know, selling and stock appreciation. What was your return over 2018 or so far in 2019? I'd be interested in finding that out. All right, guys, take care.